All right, folks, welcome to another episode of the Internet Capital Markets podcast. We have Rags with us today, who's co-founder of KAST, and I'm excited to talk about it with Rags. Thanks so much for joining us today.
It's a pleasure to be here. Yeah, and great to talk with you guys.
So to kick it off, right, I sort of want to start by talking about quote unquote the master plan because you sort of tweeted an image about this where you said that the card is just the Trojan horse. We're going to build the next JP Morgan. There's no exit plan for me. This is a generational opportunity, right? That's a big claim. But on the face of it, while everybody loves the card, you could, if someone didn't know the full story, they could say that, well, it's just a card. What's the big deal, right? It's like an off ramp. There's so many crypto cards. What's so special? What's the next big JP Morgan? Because the merchants ultimately still accepting fiat. There's a bunch of local partners who are doing a bunch of sort of magic in the background, just like you have with UPI or Pix, where it seems like an instant digital transaction, but there's a whole like settlement in the background, right? So can you sort of talk about the journey from the card to the master plan, just like a zoomed out view of what's the end game there?
If it's okay, I'll just take like a quick step back before I go into it. So, Cast today is essentially like a neobank, but built on stablecoins. The V1 was you deposit stablecoins, multiple chains, multiple types of stablecoins, or USD, and then you spend it on what is for now a Visa card, and it's available to a lot of people in many parts of the world, 150 plus countries. So the magic is that a lot of people have stablecoins, and a lot of places accept Visa or Mastercard, right? And so that was a very simple first product that we had. But to me, I take this from a more philosophical point of view, right? And that takes me all the way back to when I was a teenager. Unfortunately, I'm old now. In like the mid '90s, when the internet came along, really. And essentially, what it did was that sometimes I joke that they should have probably stopped the internet because before that, every country was a unique nation which traded with another country, right? But what the internet did was it like leveled the playing field globally. So suddenly you could trade goods on the internet, online shopping, but you could also trade services that eventually became social media, that eventually became remote working. And now the world, for the most part, minus a few walls here and there, is connected globally. But unfortunately, finance has stayed way, way behind in that, right? Finance is still extremely dictated by local boundaries, rules, etc., right? And the beautiful thing about stablecoins ultimately is that they have leveled, they basically allow money to move at the speed of the internet, and they are global and pretty much accessible to nearly anyone, right? And so they're essentially a matching for now, because Bitcoin ultimately had that promise, but it's going to while away with volatility, etc. They're matching of the speed and openness of the internet to money, right? And so if you're going to do that, then there is going to be an opportunity to build a whole new bank on top of that, right? And so I'm forward tracking this to today. There's about $250 billion of stablecoins, which is around 1% of US M2 money supply, which is around 22 trillion, right? Or maybe half a percent of all dollars in the world, a quarter of a percent of like all money in the world. But forward track this a few years, like forward track it to the year 2030, and suddenly you've got maybe a couple of $1 trillion in stablecoins. Forward track it to the year 2040, and you may have 10 or 20 trillion dollars of stablecoins. And suddenly a significant part of the world is all operating on the same layer of money that I would hope would be permissionless and open, and anyone can move money with anyone, and anyone can trade with anyone, right? You'll notice, I won't touch on the trade war too much, the trade war is largely a war about goods, not about services. It's not about what flows on the internet, in terms of services and creativity and things like that. So if you assume all those things to be true, there is an opportunity if stablecoins are going to go to 10 to 20 trillion dollars, which is the size of the US money supply today, then you could build another JP Morgan for sure. And that is the scale of the opportunity And to me, it's like blindingly obvious that it's for sure going to happen. I was pretty convinced of it 4 years ago when I first started at Circle. And Circle, most people don't know, is the issue of USDC, the second largest stablecoin. But now I'm like more convinced than ever that this is just, it's absolutely going to happen, and it absolutely makes sense, and it has so much tailwinds behind it that it's not going to, you're not going to be able to stop it. So the only question becomes, what do you build on top of this, and what do you see today, so that in 10 or 15 years time you have a significantly big enough company that is helping all these new people that are coming onto this new layer, which is this global stablecoin layer, if you want to call it that.
I want to talk about what makes the KAST product as of today special, right? Because one of the things is that we have an abundance of master plans and white papers in crypto, but we also have a scarcity of products that live up to that, right? And the thing that makes KAST unique, in my view, is that the product as of today, even if you didn't have the master plan, seems pretty awesome in and of itself, right? But it's hard to pinpoint why exactly it's so awesome because I mean, I can experience it as a user, but I can't tell why it's so much better than the other cards that are out there, right? Because crypto cards is like, it's a very crowded space and it's getting more crowded where more and more people want to launch a stablecoin backed card, right? From what I've gathered through research, it feels like it's a combination of three things. And the first one is like this extreme simplicity in the product design. And you've drawn this analogy to WhatsApp, saying that, WhatsApp could grow just by being on every phone, on every network, and just doing messaging. Didn't have to do too many fancy things. And so you brought that into the KAST product, where it's just you sort of add money, any like as long as it's a USD stablecoin, any chain, USDC, USDT, just bring it in and just spend it anywhere. Right? Really simple, easy to say, hard to do. So first is it's really simple. The next one is you have focus, and focus that is costing you today, right? So for example, you said you don't do swaps in the app because it makes you look bad to regulators, maybe it's a distraction, but it's real revenue that you're giving up, right? An app like Phantom has like a 2% fee in the in-app swap, and you can just print money from people who don't know that there's a free swap available, and you're sort of giving that up, which is you're basically giving up revenue today. And the third is that you have this frame of wanting to be a global company with local partners. And so you very early on decided that for the local off ramps for the last mile, there'll always be someone who can do it better in any given country. And so we'll just work with the best ones and create the best product, right? And my sort of intuition is that it's some combination of these three things, but I'd love to sort of lay that out and then have you sort of pick through it and tell us what is it that you think that makes the KAST product special. And you have full license to brag because it's awesome. I've heard from lots of people that it's really, really good. Yeah.
You pretty much nailed my pitch. I should bring you into VC meetings, because it's very hard for people to understand, like, why just doing these things can create like extreme amounts of growth, right? Like, you don't have to do many things, right? And I have the agency of being older, but I'm not convinced on just a lot of things that crypto people do, and they like do things for what would seem like short-term results, and they're focused by the market cap of a token, or the near-term popularity. Like, I think my benefit is just like almost undistractable, right? Like, and I have, by the way, a small fund where I trade crypto, so it's not like I don't look at like crypto prices and stuff. But for the product itself, I'm just utterly convinced that, like, if you just stay undistractable, the market is just so ridiculously big, and other people, even if there's tons of competition, will come. They'll discover it's too hard to be simple, because if you've got really simple, you have to be very good, because you have so few avenues of making money, seemingly, right? Rather than just throwing everything out there. And so, yeah, I mean, it's like the extreme focus on simplicity. If I told you how much effort went behind each one of those things, like, for example, for you to bring multi-chain, multiple stable coins and make a dollar, I have a whole OTC trading desk. Sam, who's our CEO, ex-OTC trader, who trades the shit out of that to make sure that we have all the availability of swaps and all the capabilities, so the user experience is simple. So you just think, oh, I just put in $1, I can take out $1, I can spend it, no problems. We have a whole team making sure that works, right? Making it available everywhere. Like we have the whole team around regulatory and compliance who makes that so that you can actually bring in people from nearly anywhere. It's not absolutely everywhere, but nearly anywhere, right? In picking the credit card, it's a credit card rail, not a debit card or prepaid card rail, even though it acts like a secured debit card in many ways. It means that there's greater acceptance. And then there's so many infinite amounts of details around what that acceptance looks like and in the details and workings of it, right? So essentially, like, the experience is simple for you, but you're offloading the ridiculous complexity to us, right? And that's why anytime I see a competitor, I'm like, go for it. Because it is so, it looks at the surface level so easy, but it is in the background ridiculously complex. And we have the best in the business in each one of the different aspects, right? We also, for example, from the beginning, put in a concierge, and they have it like down to less than a minute response for all concierge tickets with the support or whatever the issues are, which are numerous, right? Everything from I've got an issue with KYC through to I accidentally sent the wrong, I didn't send USDC, I sent something else. Can you recover it for me? And a whole bunch of things. But I'm just a firm believer in like, you don't need to like go and over market these things. Like if you just build a really, really good product and you execute like with like just a passion for perfection in the execution. It's not just the product can look beautiful on the outside, and that's really good, and we put a lot of effort into that. We had a brand agency from the beginning, but I think just the execution of every single part of like make sure card operations work perfectly, concierge works perfectly, and you can swap stablecoins super easily. That's like ridiculously hard work, and that's what we put a lot of effort into. And it was like about building that base from which we can build, what's going to come next, which I'll talk about in a second.
Is it almost then like the moat or the edge or the value comes from being able to tie in all these disconnected pieces together? Because you have the card issuance, you have the off-ramping, you have the dollar liquidity, the app and the concierge. And so is it just that then, like day one, as of today, you have to sort of stitch all of this together?
Exactly. And then we're making it further. So you'll be able to have what we call better than a bank. It's a hybrid of you can deposit stablecoins, you can deposit cash in a lot of countries, and it appears that stablecoins and the other way around. And it'll be Swift connected. You will have local QR code based methods. You'll be able to have a business version, so you can do payouts for business reasons as well, and a lot more as well, including things like payment links. So if you're a remote worker and you need to send a link to someone to collect money, you can. All of this in a singular app. So it's better than a bank because a bank just gives you the cash accounts, probably in one country. We're going to give you cash accounts in lots of countries, payment links, QR codes, all of the stable coins as well, all wrapped into a single app. And so the base of it is like you got your account, your card, you spend it, but the deposit and receive, like we'll go super, super deep on, so no one can beat us on that. That's where the magic is. And I don't think everyone says, oh, it's easy, like someone can build it. I'm like, yeah, sure, go for it. Be my guest.
Yeah, I mean, okay, what's the user base like today? What's the scale like today? And who are the different kind of people using it? So I assume anyone with stablecoins, but is that like crypto traders, people who earn crypto, remote workers, and you're rolling out virtual US bank accounts as well soon. So what's the mix of user base? And
Yeah, so it evolves over time. We've got hundreds of thousands who've registered and tens of thousands who use it. At the moment, very very sticky. I think it's something like 50% of people who are active use it weekly, which is at the very top, amount for any neobank is super high, and I think something like 30% plus use it daily. So it's very very sticky. But mostly because it's reliable. People are like, okay, I can rely on this. At the beginning, because we were only accepting stablecoins, of course, it's slightly more crypto native or stablecoin native people. But now we're seeing the breakout amongst people who are from other industry, people like remote workers and others who are onboarding it. And for us, it's just a job of like keeping the product very simple, but adding in more ways to deposit and send money and on and off ramp, as we would say, so that it becomes more usable for a wider audience, And so we're picking up other people in the audience as time goes on. But yeah,
Yeah, so this is actually pretty interesting. I'll just try and break it down even for the audience, just so they get the workflow here, right? So I'm a remote worker who lives in Sri Lanka. I need to get paid by someone in the US, right? The way, like, there are some ways to do that traditionally, where they can send a wire to your Sri Lankan bank account. The bank will receive it as US dollars. You will, at least in India, you have to then go and provide some reason as to why you got them, give an invoice, give some registration. The bank will then pick a rate and convert it and give it to you in fiat straight away, right? And in like your local fiat, and then all the rules and restrictions, like if you want to spend it elsewhere, if you're moving around, then you have to take that money out again. It becomes difficult and all of that. Why isn't so try to provide a service, um, which may or may not be available. But the flow with KAST would be that I would download the KAST app. I would create a KAST account, which also gives me a virtual US bank account, because now it's almost like I have a bank account in the US. So for my employer who's paying me, they just make a domestic transfer to my KAST virtual account. Once the money is in there, it now gets wings, right? In a way. And so the wings are that I can now, the easiest is if I have expenses, I now have a global Visa card that I can just use anywhere in the world to cover my expenses, right? That's the first thing. That money is immediately spendable. It's not magic internet money. It's not locked into some crypto wallet. It's immediately spendable. And on top of that, I can off ramp it anywhere in the world, wherever I go, through the ATM services or through the KAST off ramp partners all over the world. I can maybe earn an interest on it, or I can withdraw it as stable coins. If I am crypto native, I can withdraw it as stable coins into a phantom wallet, do my DeFi stuff and swaps and all of that there. Is this correct? Is this the workflow?
that is absolutely bang on. But now also imagine that I'm just showing you one leg from the US to Sri Lanka. Now imagine that you would have opportunities to get money deposited, in 6 months' time from lots of countries, or you could send a payment link, and you could send it on to a lot of countries, right? So, in your first example, you've got one option: money goes from the US, lands in Sri Lanka or India, right? In this option, you're getting the money as dollars. You've got a dollar account effectively, stable coins, but you don't care. And then you can send it. Like you might bring a little bit back to pay your rent. Then you might send some money to a friend. You might use some money on a Visa card. You might send some money in stable coins to go and do some trading, and you might save some, in a treasury-backed yield-bearing stable coin at some point, as some type of. So it's like your perfect remote living dollar bank account is what we're looking.
Awesome. I think one interesting sort of segue here is to just talk about what is so special about stable coins. And you uniquely here have, what you have is you have privately issued stable coins on public blockchains, right? That's the combination that is sort of powering all of this, right? It's not a CBDC. It's not a private, it isn't, so it's not sovereign money in that sense. It is backed by sovereign money, but it's a privately issued stablecoin on a public blockchain. It's not a CBDC. It's not a wrapper in the sense that Wise and Revolut to a large extent are like wrappers around your TradFi rails, right? And so this seems like an entirely new, infrastructure. And so if you could spend some time just explaining to the audience what is so special about this infrastructure that enables all of the things that you're doing, that all of your competitors, whether in the Wise deal space or in like the crypto card space, aren't able to bring together.
So I think the first thing about stablecoins is that, especially dollar-based stablecoins I talk about, is that there's at least 2 billion and maybe closer to 4 or 5 billion people in the world who want dollars. Like, if it's pretty obvious that you go to, I always say that people are like, why dollars? And I'm like, well, any country in the world you go to, and I've been to 100 countries personally, or more, you ask them what the exchange rate is against dollars, and they know. They don't know probably most other exchange rates, but they'll definitely know the dollar rate, right? So everyone wants dollars for some reason, or at least have a dollar bank account, even as a backup account of sorts. But it's very hard for most people to get dollar bank accounts. You can get it if you live in the US. You can get it maybe in very open countries like Singapore or Australia the UK, maybe many parts of Europe, but it's not a guaranteed. And guess what? The people that need dollar bank accounts the most, they're the ones who have the least ability to get them because the government controls whatever, right? So the magic of stablecoins really is like the underlying fact is that the public blockchain is open. You cannot stop where the money is going, right? It's public and open. And then the second thing is you're putting dollars on that, right? So suddenly there's just like a demand and supply mismatch. Like maybe 500 million to a billion people have dollar bank accounts, and maybe five times that need dollars, right? And so you're just closing that gap, like by putting dollars on the internet and making it movable to anyone who all they need is just a wallet, like a crypto wallet, super simple, right? And so it bridges that gap immediately and opens that up, right? But now you've got that layer, you've got to go and add services on top of that layer. So you're basically like reconstructing the banking on top of that layer again, right? Because the layer in itself is like, okay, it's great now I've got dollars, but what do I do with it, right? Can I go and spend it in many places? Well, most people don't know what stablecoins is, most merchants, so I need to put a card on it. Okay, I want to save it, so I want to swap it into a yield-bearing stablecoin that's like treasury-backed. In the future, you want to maybe take a loan in stablecoins because you've got some other asset to secure it against, you know. And so all the things. Imagine you're just building banking from the ground up again for this new layer that is happening. In some ways, it's no different to if you formed a new economy in the world. Let's say, let's say they took an economic block and they unified it, and it had no banking, but they had a common currency, right? So imagine stablecoins are the common currency for the world, and it's a unified block. But now you got to go and build a bank, a whole banking services on top of it. And that's essentially what.
Yeah, I think it's almost like, again, right? This is the thing about foresight, where it's almost like you can spot the lotus among the thorns. Because for the longest time, stablecoins have been around, but they were used for the most, in quotes, like trivial purposes, right? You could only use them within the crypto economy, like to buy meme coins or trade ETH, BTC, Sol, whatever it is. And these were like non-productive use cases, what they're sort of considered. And now, but the asset was still good because it was still backed by real USD bills. It was still there was still a bank account sort of backing it, and you're just able to see that gap more clearly than most people, and you're building all of the services around that, right? But you're also building your own stablecoin, right? You recently announced the KAST stablecoin. Why do you think you need your own stablecoin? What's the plan there? And what is the mechanics? So is it going to be dollar deposits? Are you going to swap out of USDC, USDT? Like, what's the thinking with the KAST stablecoin?
So if I talk about the cost stablecoin, I got to talk to you about a whole new product suite that we're building, right? And so we have basically what I would call as a hybrid product. It's a combination of stablecoins on chain and and like Visa cards and fintech style products on an off ramp with cash, etc. Right? But we always, in my, actually I have like a 25-year view on this. I view that the on-chain part, that there's going to be an on-chain bank. There's going to be a world in which, like that openness that I've described is available to anyone and everyone, and everything's going to come on-chain. And actually, you won't be going off-chain that much, right? And so what we're building actually is we call it a stablecoin wallet, but imagine it's like an on-chain bank. So forget about the hybrid part of it. It's going to be a separate app, by the way, completely separate. It will launch in about 3 months' time. We're building on it right now, and it's essentially like a pure on-chain bank. And let me explain this, and that will sort of get to where the stablecoin fits, right? It's a wallet, another wallet. There's hundreds of wallets, so you're probably like, why the f are you guys building another wallet? But it's a stripped down wallet focused on banking. You cannot go and trade initially like most crypto. It's not for you to be able to buy NFTs. Our view is like, if you want to do all that, go and do it somewhere else. But what we're going to build is a wallet where you can deposit multiple stablecoins, multiple chains, and it lands through an engineering mechanism we're finalizing right now as the KAST dollar on Solana, right? So we essentially take care of the swapping, the bridging, the pooling, the gas, all of that, and make it a KAST dollar on Solana. And If you want to send it out, you can also send it out as multiple stablecoins, multiple chains. But essentially, it's a wallet. Imagine a bank base layer built just on Solana with the KAST dollar in the middle. So at the very basic, it's a bridging swapping mechanism that's ultra simplified, right? You just deposit cash, you see a dollar, and then when you want to send that cash, you send it. There may be in some instances a 0.1% fee just to cover our costs essentially, but it's super simplified. So it's essentially like the creation of like a composite dollar, if that makes sense. That's why it's sort of more decentralized rather than just being another stablecoin. It essentially facilitates all the swapping, bridging, all the experience that you would normally have to do into a very simplified experience.
It's so funny you say this right now because before our call, when we were just prepping for this, I was showing Sarthak what a bridge looks like today. So I just showed him D-Bridge. It's a great product for crypto natives, but it has like 84 chain options and 200 tokens, and you have to enter in your addresses and get all of that right. And so I've long said that wallets are a feature. So it sounds really cool that you're aggregating the dollar in that way.
Yeah, so we're aggregating the dollar liquidity, and it would also be represented on chain, right? So it's a self-custodial wallet, so you can see, hey, I own this asset, the KAST dollar, and so there's a lot of engineering we have to go into to basically create a protocol on top to facilitate this, and it's very innovative in terms of the simplicity of it, right? But then you'd also have things like it'll become a little bit like WeChat or Venmo in the early days. You can just send money to someone's phone number. I can send money to you, and then you just download the app and you're like, oh, cool. Like I just verify my phone number. I've got dollars there, right? So we think it'll grow very fast for this use case. The second thing is that we are now going to put in on top of the swaps and holding dollars, like more investment sort of style things. So you'll be able to access safer DeFi rates, like let's say, for example, the Aave rate or USDE or other similar things, which we initially will curate what you'll have access to. But you won't be able to do like traditional, it won't be a traditional DeFi wallet where you go and spin up direct DeFi access. Imagine we curate a simple list of DeFi rates which we think are safe, but you're picking, it's still self custodial, you still own it. But we take care of, like, we have a paymaster and all this other gas and all these other things to make it very, very simple. So it's like, hey, I want to go and deposit my dollars here and then I want to earn yield on it. It could be treasury backed or it could be something that's slightly higher, but not ultra risky. Our view is not to put something ultra risky in there, but things like Aave, which have proved themselves over time to be safe. I think USDE is getting there as well.
You had this story that I heard about how there's this massive yield, like as of today, since every stablecoin is dollar backed, there is an underlying yield that's sitting somewhere that is not passed on to the consumer, right? And you had this story about a fintech founder of yours, where I think a fintech founder friend of yours, where his sort of banking partner was earning more in revenue from his deposit, from the interest on his deposits. Was that like the obvious gap that you saw, which also partly motivated this? Like, I think it would be useful for people to know that as of today, on the billions in stable coins, like the yield is basically being kept away from retail users and apps that are the holders or the intermediaries who are actually bringing this to the masses, right? And I think it's actually a pretty unique unlock, right, to pass on the yield in the way that you're talking about.
Focusing on the yield, but also getting access to yield. Like when you deposit money with the bank lends it out not just to treasury stuff, but also lends it out to for car loans and home loans, right? You can't even get the treasury rate, let alone the slightly higher rate. Like the bank is, they're lending out home loans 50%, maximum 50% blend. It's very, very safe, right? So essentially on chain, you can get access to that without a bank in the middle, right? And everything banking is ridiculously profitable because everything a bank does, I was just going through the journey of this, so I was building our deck, is profitable from day one because they sliced every single piece. You just think about it, like you're born, you go and get a bank account, you go and earn some money in your first job, you go and put money in the bank. The first thing the bank does is they don't pay you any interest or near nothing, and they keep all that money they collect, right? And they're just like, you're lazy, you're not going to put it anywhere else, right? And so, and they just put so much friction in there. So they automatically They're like, hey, look, you don't, we don't charge you that much in fees, but we will collect the interest on it. And when you're young, you don't have that much money in the bank. You think this is a good deal. After a while, you make some more money. You scale up how much money in the bank. They're still not paying you. And so next, what happens is that then you go, okay, I want to go and earn a higher interest. And they're like, okay, cool. We have these options. You can lock it for 6 months, 12 months, 24 months, 5 years. And so then you go, okay, like I've got a few $100,000. I'm a little bit rich now. I'm going to go and lock a certain amount of money in the bank, and so I will lock like 2/3 of my money. I've got 300,000. I'm going to lock 200,000 in the bank, right? And you're earning now. You're like, hey, I'm earning well in US dollars, like you're 4%. Awesome. Like I'm getting some interest back. Then you have some short term thing. You're like, hey, I need to go and like build renovate my bathrooms and my kitchens and my house. And I have a short term thing where I need a bit of credit because I want to go and fix my house and I don't have the money saved up and I might as well just borrow because I've got earning capacity. I'll be able to pay it off. I need $150,000. Ooh, I've only got $100,000. I've got $200,000 over there, right? Invested. So they're like, oh yeah, we'll lend it to you at 15%, right? And so it's just ridiculous because you can't unlock the money that you have and you're borrowing money at this ridiculously high rate and you're like basically paying 15% and then you're earning interest from 5, and this just compounds, right? Because then you're like, oh, okay, now you paid off that loan for the mortgage for the bathroom and kitchen that you fixed. Then you go, hey, I've got all this money, I'm going to go and invest in stocks, and I've got all these stocks over here and they're worth like $1 million, right? But I need credit for things. I need a car loan and stuff like that. But I can't borrow against the stock, like even though it's like 10 times higher than the loan. And so you got to go and borrow against it. And the whole system, by them separating up all these different components, is just basically made to milk you every single bit of the way, right? And that is, I think, the promise. I think if you build an on-chain bank, because you've got the whole thing there. It's like, hey, this person as a unit, yeah, sure, they might have some borrowings and debt, but they have all these other assets as well. They've got a house, they've got a car, they've got stocks, they've got maybe some bonds, they've got investments and all this other stuff. So why we don't need to like charge them like high rate. It's like super secure, right? We just charge them pretty much. If they're earning 4%, we might charge them 4.5%, And so this is where like banks basically fleece people just through credit, even when the credit that most people take is just ridiculous. They don't actually need to take it. They could just borrowing it because of a short-term liquidity issue. It's not because they don't have money necessarily, right? And and so if you were to rethink it, you would have it all in the same place. Like you would go, okay, I have an on-chain bank, I have my on-chain stocks here, I have my crypto. I want to borrow a little money. On-chain they know that I've got a house, a physical property, that is valued at something and it's tokenized and valued here. And now I want to borrow against it, and someone assesses it and goes, okay, well, you're only borrowing 10% of your assets. Like, doesn't matter. We'll give you that money for nearly free, and other people come and lend against it, right? So there's a totally new way to build a bank on chain.
I have a question here of whatever you're saying, Rags. It sounds like you're building a bank on the blockchain. So these are all very traditional problem statements that you're really trying to solve, which makes me think that do you think other people are not doing it, or what really is your competition? Or I'm just thinking whenever I talk about, or I'm meeting with founders who are building on crypto, a lot of them are building trading apps and wallets and stuff like that. But it feels like not too many people are really solving for these very real world issues. Do you think there's a lower hanging fruit with a lot more profit potential in all these other opportunities? And you have taken, owing to the fact that you probably come with a few more years of experience compared to a typical crypto bro. Do you think it's that fundamental mindset of a traditional business that you're trying to build a use case, which is much harder, but that also means it's more difficult to show the value proposition to people who are in the crypto ecosystem because they're essentially wanting to bet on crypto to trade and make more money. So it sounds like a tougher problem because this means you're essentially building something for when the mainstream folks will be ready to come on the chain, which may actually happen 5, 10 years down the line. I'm not aware of the timelines, but is that true?
Dude, crypto is Las Vegas. It's a massive casino. And I'm coming and building the Nevada Bank, right? Which is going to service all the people that live in Las Vegas and all the people who come through Vegas. And eventually, Nevada Bank will be I hope, the biggest global bank. But we're building next to a casino, to be completely honest with you. And so if you started building a normal bank in Nevada, people were like, this is so weird. Like, you can just go to the casino and you can build so many cool things around. This is like the most boring thing in the world, right? Without understanding that the company that will probably end up making the most money is Nevada Bank, because they're just sitting there building services around all the shit that other people want, right? And so it's not necessarily sexy stuff, but honestly, like like I said, I didn't really have any exit plan. I think the market is just so ridiculously big into the future, and forget about the money or the profit, which I think can be very, very big, substantial. I think people hugely underestimate how profitable and how big this could get. Um, I think the major, more fundamental thing is that, look, I was born in Sri Lanka. I moved when I was 5 years old to Australia due to the war in Sri Lanka. And then subsequently, I lived in a lot of countries in the world. I've traveled to a lot of countries in the world. The fundamental problem is that this concept of borders and the concept of money being restricted country to country is just ridiculous, right? And so someone has to build to fix these problems more fundamentally. Like ultimately, the money doesn't make a difference to me. I'm like 40, nearly 45 years old. You know, even if I became like ridiculously rich, what am I going to do? Like, I'm not going to take that money to the ground. Like, everything, you eventually die and it gets recirculated, right? So that doesn't make a difference. What makes a difference is that the world is just fundamentally not fair, and I don't think like other people are going to push it forward. We have the opportunity in crypto. We have everything there to do it, right? It just requires you to focus and go, okay, like what are we going to build one after the other, right? The other thing also that crypto people, on your point, make a mistake of doing is they're just looking for narrative and they're looking for short-term stuff that'll be interesting, and like it just misses the point of like, and I'll give you a really real world example of this. Like, everyone's talking about RWAs the last 2 years, like RWA, real world assets, it's the whole thing. I want to go on tokenize some building in Dubai. I want to go on tokenize whatever, right? You don't need to do that. There's like billions of people who want to trade US stocks who can't trade US stocks, right? It's super hard for a whole bunch of reasons to trade something that people want to. You don't have to go and tokenize like the crazy funky thing. There's something like blindingly obvious in front of everyone of a mismatch of supply and demand that you can fix, right? And if you do, so I'm very pragmatic about these things. I just like, let me go and fix a problem where like the demand is ridiculously high and the supply is ridiculously low, right? It's like old school economics. And then if a lot of users come and do that, then you fix the next problem that has a lot of demand and supply mismatch, right?
If you were to think about the different ways to unlock growth, it feels like one of them is just more people having stable coins, right? It's like for WhatsApp, the unlock for growth was more people having phones that can support smart messaging. Here it's just more people having stable coins. And to some extent, that is controlled by regulation in various countries all over the world. Like the easier your on-off ramps become, the more trading applications you have, the more. This is also why the public blockchain works, because it's sort of permissionless. You can use it for anything, and so you have all of the uh, trivial use cases first, and then you can build on top of that base. Like otherwise you're just in a ghost town, right? So how do you think about growth and change in regulation as it impacts your growth?
So I think one is the KAST app. Think of it as a pure play, deposit and send stable coins and currency, spend it, save it. That will just like WhatsApp, which is like available on more and more phones. We will have more and more on and off ramps, but the base will stay very simple. I think the second thing we're building is I'm going to call it code KX. I don't know what it'll eventually get called, but it's this stablecoin wallet. It's a full on-chain bank. You will have you'd be able to deposit and send stablecoins and swap them. You have higher yielding opportunities on there, so you can earn more, including US stablecoins and yield-bearing stablecoins from other countries as well, potentially, and other currencies as well. Then you would also have things like stocks and top crypto that you'll be able to have there, and you may be able to do things like deposit your Bitcoin and get stable coins that to borrow against it, etc. But like that's sort of like a investment earn money platform, I guess, which will be a separate app, just to be completely clear. It will be self-custodial, and that is the beginning of our sort of like on-chain bank with like usable products, which are just not like NFTs and like trading and stuff like that. Eventually we may put that in there, but we want to keep it as a very clean stablecoin wallet experience, and that will eventually become like a product where you can, like a Venmo style product, where you can send people money by phone. You can potentially tap phone to phone and transfer money, and all of that innovation we're building there. But it's important from a regulation point of view for us to separate it, and the major reason is that KAST is a custodial product, and we have to do a custodial for simplicity, but this one will be a self-custodial product. So you own the keys, you own the assets. We don't know what you have, but it's a curated experience, so it still feels very, very simple. And then it's up to self-custodial means you own the assets. It's up to you to figure out a lot in the regulatory. Now on that app, eventually over time, we may give you options so you can KYC and have access to things like a card or on and off deposit and send, right? But not from day one. And then if you step into that, then you're going to be subject to, the regulatory, depending on, your citizen or citizenship and residency and things like that. But that product is self-custodial and gets us a little bit away from having to play. Like we're going to have to always have very strong regulatory muscle around our main KAST app. The self-custodial one will be one where you can explore more because it's self-custodial.
Okay, now as we sort of close out, I have two more questions. I think another 15 minutes and we should be good. I want to make this actionable for the audience, right? So the first thing I want to talk about is for someone who is, let's say, in their early 20s or just out of B school, working in the Indian like startup ecosystem. How do they learn from you the art of being early and the art of seeing these inflection points very early, right? Because you've done it not once, but I think 5 times, when you joined like AWS when the cloud was taking off, Facebook, enterprise when social networking was basically peaking. You then joined Zoom just before COVID, I think, when video conferencing was not yet the big thing, but became everything. And even post-COVID, of course, remote work is important. And then you joined Circle way before it was obvious that stablecoins are going to be big. And now you're still making a bet that might seem obvious, but it's very hard for people to make with this conviction, right? And so through a combination of lived experience and, I don't know, genes, you have this ability to be early repeatedly from the start. How would you sort of share that with someone who is early on in their career and has the opportunity to make some of these decisions that could positively impact where they work and what they do?
And to me, it just sounds like astrology, because can you imagine someone having the foresight to join Zoom right before COVID struck? This is like such wonderful stroke of luck, but I'm sure there is a framework in your mind, or there is something that you're able to spot.
Yeah, so I'll just tell you the thesis through which I move companies. Firstly, I always generally reach out to the CEO or chief business officer or something like that of the company, and I go through this like process of like analyzing industries and macro changes, and then I figure out something that I'm really interested in and which I think is going to be really big, and then I go and analyze the companies, I analyze their execution, and then I go into a lot of detail about it, and then I'm like, okay, it's this company, let me go and reach out and try to figure out how I can get a job there. So my mental model of how I joined all of these companies is different. Like I never like applied for a job. It was always like, I went to cloud because I was in IT infrastructure before that. I had my own company that didn't work, and then I could see the thesis around cloud, and it just so you have to sort of do it in reverse. I think macro first. I think like, what's the macro trend? What is obviously going to change because it's fundamentally broken, right? And like banking on chain to me is like, it's just the supply and demand is just so ridiculously mismatched, and the solution is appearing, right? That it's going to happen, right? And it's very fundamentally obvious at a certain point. I say with more conviction now. 10 years ago, I would go into these things going, I'm a bit convicted. After you get them right a few times, you're like, okay, like I'm really convicted. And you're not always 100% spot on, but you learn through that you don't have to be 100% spot on. You can kind of directionally be correct. And so to go back to your piece, firstly, don't go to B school. It's a waste of time. So, and I say that only not really jokingly, kind of seriously. I understand. I'm actually writing an article for Tech in Asia on this. I kind of understand why people in India would go to B school, because it's an exit out of where you've come from, not much in many instances, and so you need some sort of branding to help you exit it, whether it's a B school or IIT or whatever. So I get it. I'm not being like an ass about this, but the negative of B schools is that it's controlled failure, right? So people go there because they're like, hey, I want a network that I can buy. I want to be able to learn about all these things, right? And unfortunately, like, it controls your failure because it puts you in a position where you can land on something that you want to get to through a controlled mechanism. And startups are the exact opposite of that. They're like uncontrolled failure, right? And so, and risk taking. And so you have to understand risk taking and how far you can push things. And unfortunately, what B schools teach you is it conflicts with that, right? And so what I tell people is, if you go to B school and you want to have a career, then that's pretty good. But if you want to go and build a startup, not so good, because you're going to need to get really used to like uncontrolled risk taking and be able to assess risk and where you push and where you don't in a better way. Having said that, I respect people who came from nothing and had to go through getting to B school a lot more than people who had everything. Right? The second thing I would say, if you're young, is that look at the macro trends first and foremost, and look for very large problem statements which are really obvious to you that need to change, that just don't make sense, right? And I think when you're young, it's a beautiful opportunity because you can just look at the world and go, why does it work this way? This makes no sense at all, right? The thing maybe with age, like I may be able to see that, hey, this doesn't make sense, but generally you don't with age. Like you'll question things less and you'll become more comfortable with life, right? So the beauty you have when you're young is that you question things. I recently had Zach Glover, who was at Phantom, and he was like the famous reply guy. He recently joined like a week and a bit ago, and I kind of said to him, like, don't come to all the meetings, don't come to all the other stuff that we're doing. I just want you to go and look at our business and tell me really critically, like, what needs to be fixed, and let's think about it like completely, right? Because you have a fresh mind. Once you come in, like whether you like it or not, like a month later or 2 months later or a year later, like you have an opinion because you've learned things. But the best time is when you just join a company, because like you're just like, oh, this is fucked and this is not fucked. And sometimes your opinions are right or wrong, but you have fresh thinking on it. So I think that these are sort of like two things that I would say is like you have to, and then I think the third thing, which is sort of unusual, is like don't fucking listen to anyone, right? I don't really care what people say, and I don't really care about their opinions. I did care a lot more, but I think over time I just realized that most people are making shit up anyway, and they don't know. So why do you listen to them? Just because like they're in a higher job or they're in something, like you shouldn't, whatever I'm saying, don't listen to me, right? Like I think I know, but who the fuck knows if I actually know, right? Like, and so I think this is maybe a cultural problem. I'm Sri Lankan, obviously a lot of the audience I'm guessing is Indian, is like we like to look up to people. I would tell you, don't look up to people. Look up to people who are in a respectful way, because obviously have good manners and be a good person. But don't necessarily look up to someone like they know, right? Because they will make it their job to tell you that they know. And if you listen to them, you are reducing your independent thinking. And one of the most important things for me always is to think independently of like everyone else, right? I value that like to an extreme amount. and so it allows me to shape my thinking in my own way. It's really, really hard to do because you'll get noise from people's success and what they've done. But I can guarantee you, being older, that over time you discover that a lot of people became successful accidentally, firstly, or they had one hit and they did it really well once, and then they haven't really done it very well afterwards, or they had life circumstances that landed them in their place, right? And you don't know which one of those they got. So, like, I think, yeah, that's sort of like my three key lessons. Like, understand how to take risks. And B school may not necessarily land you there. The second thing I think is definitely think macro first and what needs to be fixed, and then you can narrow down on the industry and how you go about that solution. And the third thing is, like, don't listen to anyone. Like, have independent thinking about problems, and that will lead you, especially when you're young, to a lot of failure because you will think about something wrong, but eventually you'll learn. Failing and failing and failing, and then it'll start ticking over, right? But asterisk that on if that's the path you want to go. It's a very hard path, by the way. You're going to make a lot of mistakes and a lot of failure, and I have completely my fair share of going pretty much broke multiple times in the process. But if you want to be a builder, that's the path you got to go down.
Yeah, that's incredible advice. I think now the final question to close it out is how do they get you to take a flight out to try and hire them, I guess, like you did with Zach. You recently put out a pretty epic tweet about how you hired Zach. You put a lot of work into it, right? It was like over 6 months. You went out in person to like LATAM, which is the exact opposite end of the world from where you live. And so you're very clearly, you sort of believe in the team you build is the company you build, I guess. And if there's sort of someone who wants to work at Cast, I think you already laid out the blueprint for them because look sort of macro, like understand the business and try and then reach out. But are there open roles you're hiring for? Is there any advice you have for people who may be inspired by this and say that, hey, I want to work at Cast, I want to be part of this team on this mission?
Generally, I don't necessarily look at roles per se and functionally. Of course, some things we need, we need a bunch of compliance people, customer service people. Like, there's really certain roles that we need. But, when you're building something that's so fresh, you need people. You need smart people who can do things, who are builders, who are like sleeves rolled up, can do stuff, right? And I always had a saying before I came back to building as a company when I was like moving through jobs, right? And my saying is that make it really hard for that person not to hire you, right? And what I used to go through like extreme, when I remember like I had a company, it went broke. I was not only bankrupt, pretty much bankrupt, I was in like negative debt massively. I needed a job at AWS, but I literally spent 20 hours one session building the best deck I possibly could. I mean, back at the time that was like completely outstanding, but I just put so much ridiculous effort that they've seen that this person cares about the company and the mission and everything so much that it's like, okay, like you could not hire me, but you're gonna have to sit there, thinking like, do I really not want to hire this person, right? And I think a lot of people like want to work at places. I get like my inbox is full every day of like, hey, I want to work with you. Can I chat with you? And I'm like, dude, I've got so many of these. Like, no offense. Like, I generally I have this thing like if they're younger, I try to respond the younger they are because I try to not. I don't have that much time, but I try to be more encouraging in young people. If they're older, I was like, hey, dude, you should have figured this out right now. Like, you're going to have to go beyond, like, hey, you want to catch up for a phone call? Because I don't have time for it. But, like, I ultimately I look for a builder mentality, right? So if someone reaches out to me it doesn't have to be complex, but if they're like, hey, like I went and tried your product and I did this and I found that, this could be a problem to solve and this is how I think I could come and fix it and this is how I'll build builder, and they put together a one pager and they really, and what they're writing really sticks, it's going to stand out, right? Because like I get 200 people that don't do that, and then there's going to be one person that really, really tried. It's not always going to be land because sometimes maybe their thesis or they still don't quite fit. But at least you're going to get time probably with me where I'm going to be like, hey, I need to hear this person out because I might be missing out on someone who's really, really smart, you know. But I joke, and people don't like this, but there's a lot of things that I say that people don't like. But I think of hiring a bit like a members club, right? And it's not meant to be exclusive, but in some ways it is, right? So a lot of people come through referrals. That's number one way that people get in. And that's really because multiple people have vouched for the quality of this person's work and the quality of this person's thinking, or you've got to hustle your way in, right? And that's why every time I get a recruiter is like, "Hey, you want to use a recruiter?" I'm like, "No, no recruiters." And they're just like, "Why?" And it's like, because I want all of my leaders to hustle. My leaders hated it, by the way, at the beginning, because they're like, "Why do you make my life so hard?" Right? I'm like, "You go and find them. Like, if you want to find a good lawyer, go and scour through LinkedIn, and either you have a network or you need to go and find the person." Right? And you need to go, okay, the person who's working at this company who did a very similar thing, I reckon they could be good. Let's go and find them, you know, which is what I do with Zach, right? Because I'm like, "Hey, we need this in our company." And you know, in a members club, it's kind of similar, because if you've got like a really cool club, you're both referring people in, but you're also like, "Hey, like there's this person who's gonna part of our club, right? Like, how cool would it be if he or she was in our club and they were around all the time? Like, how much cooler would our club be, right? And how much more rich would it be, you know?" And that's the way that I think about hiring. So sometimes people are coming in through referrals, and sometimes you just have to go and court them and bring them in, right? And so, yeah,
This is like a great hack because most people don't put in the upfront work, right? Most people just send the DM saying, "Let's collab" or "Let's work together," without putting the upfront work. And so it's almost like a no loss trade for the person applying if you do put in the work, because, like you said, you have higher odds of getting hired. If not, you'll at least get a response and get noticed by the person that could pay off in the future. And if not that, you've learned something new in the process of creating the brief that can become your public proof of work or can get you hired somewhere else in the same industry, right? So I think that's
bingo. And also the thing is that, like, by the way, like the way I always thought about joining a role was I was always like, I'm not applying to 100 companies. I don't care about most of the companies. If they're like, you know, when I in my younger days when I was a contractor, yeah, okay, fine, I'll apply for companies. But when it's like I want to make a meaningful career transition, I pick one, two, maybe three companies max, you know, and most of the time just one, and just put singular effort into like, how do I become a part of this company? And it's not about role or whatever. It's like, I just want to, I think this company trajectory wise has right macro, they have the right execution. I want to be a part of the journey. Let me open up a dialogue around this and try to make it happen. And if it doesn't happen, then okay, let me try the next company. But you're putting a lot of effort into very few opportunities, as opposed to just like spraying it everywhere, which very few, like 1 in 100 people probably do, you know, that method. But that's how you get the best opportunities, you know. I think it's kind of counterintuitive to what most people have been told, but yeah, that's my view.
awesome. No, I think that was great. I think that's the episode. I think we've got everything. Thank you so much, Rax. This was great fun. Being a user from the outside, having worked with KAST in small capacities as part of the Solana ecosystem, it was great to hear firsthand how you think about a lot of this. I think most people find this very useful, and super excited to see where KAST goes over the next 1, 5, 10, 15 years.
Yeah, and thank you for all the support. It's really truly humbling for us. We're trying to build something great, but of course, we're only as good as the users. Thanks for all the support.